Hello and welcome to another episode of Ninja Trader Unplugged. I'm your host, Michael Leidick from Back to the Future Trading. Today we're going to talk about the concept of divergence. Divergence is one of those big words that a lot of traders misunderstand when they first see or somebody taught it to them really badly. There's that famous poem that says, "Two roads diverged in the woods." And it basically means that one road went one direction while another road went the other direction. So what does this have to do with trading? Well, we can monitor for divergence between price action. So say, for example, the market is moving higher and some other indicator or some other measurable value down here that could be going lower as price is going higher. So that would be an example of bullish divergence. Conversely, if price is moving lower, but something down below is moving higher, that would be an example of bearish divergence because two things are moving in the opposite direction as price action is moving lower. Then we have classic pattern divergence where, for example, we have a double top forming and an oscillator or some other variable is lower the second time the market approaches that high. And then conversely, a classic double bottom divergence pattern where you have a value that follows it down the first time, but the second time we approach the low, there's a divergence. Again, there's an increase in the value of the thing we're using to measure against price action with. So let me show you a template that I've put together for you. In this chart, I've got two indicators from our free NinjaTrader indicator Dropbox file loaded on the chart. And one of them is really cool. It's a divergence tool called Divergence Input Series. And what you're basically doing is telling the computer, I want to compare one value to price action. So here's what I've got set up. I've got the colors of the signals set to red, red, green, lime. And then down here, I haven't changed anything to the defaults. Down here lower, this is an important value you want to change. It's the price data. So I need to tell the computer, hey, I'm using a 5-range bar. I'm not using a 5-minute bar or a 5-tick bar. This is a 5-range bar. And now this is a really important value right here. I'm going to have it set to 1-1, but later on I want you to go back and play with these values because you can adjust the sensitivity of everything we're doing by controlling the swing points the software is using to analyze for divergence. As I roll down here, the final value that's important is the input series. What are we going to compare these 5-range bars to? And in this example, I've chosen CCI. And I've told the computer, hey, I want you to watch CCI as price action changes. And when that happens, you can notice that there's some really cool signals here. And what the software is essentially telling us is this. Hey, as price was moving higher, the CCI value was moving, guess which direction? It was diverging, and it was moving lower at that point. So let's draw an arrow here just to illustrate that point. As price was moving higher, CCI was moving lower. And then we have the next setup. As price was moving lower, CCI was moving higher. And the computer reminds us with a pair of green arrows right here. And you can see at just about every instance, there's a fairly big push. If we measure with our ruler tool, you can see that from here to here, it moved 37 ticks with a maximum adverse excursion of about 11 ticks. From here to here was just an absolute failure. And then from here to here, 22 ticks. From here to here, 31 ticks, and now so far down from there, 43 ticks. So quite a big swing with a lot of those signals indicating those moves before the turn. There's one setting that I really like that a lot of people have found works well for them, and that's doing something that is relatively unconventional when it comes to divergence. I scroll down and I choose the VOL indicator, straight out of NinjaTrader's indicator list. So this is a standard default indicator. When I hit OK, you'll notice that the input series changes to volume. So in essence, think about this. It's going to compare volume to what's happening in price action. So sort of a poor man's volume spread analysis, but check out the results. Okay, here, take a look at this. Look at how price action is moving lower and these green arrows start appearing. That's telling us volume is coming in to this pullback. People are starting to buy into the low. And that can be really important when you're wanting to see your minder turn green relatively quickly. It says, hey, if you're going to trade this pullback, a lot of other people are trading it too as price decreases. And then as we moved higher, the software was saying people are starting to sell into this move or fade the move as they move higher. Look how this looks on a minute bar while we're here. So here I've changed the bar type to a 1 minute bar, and then come into the indicator list and told the indicator, hey, I'm using a 1 minute bar right now. So I'm using a 1 minute bar, and now you can see there's a little less information on the screen because we've brought the choppiness of a time candle back into the picture. So if you're going to use this volume divergence setup, I would highly recommend you use a non-time bar like a tick bar or a range bar, even a Renko bar, and you'll find that you'll get much better resolution on the signals. This is pretty good, but we know we can do better with a range bar. So remember, divergence can be powerful if you use it correctly. You've got a really great tool here if you want to start to employ it and use it in your own trading. I would recommend, again, finally, before we leave, like I say in all my videos, watch for signals in the direction of the trend, and you'll do a lot better. If you like this idea, you want these indicators, all you have to do is go to the backtothefuturetrading.com/unplugged page. Once you're there, you'll see a place where you can put your name and email address. I'll send you a link to the YouTube Dropbox area where you can download not only both of those indicators, but the template as well. So load the indicators up, load the template to your NinjaTrader files, load a chart, and you'll have exactly what I had here today. Remember, divergence is cool, but you got to use it right. Experiment with a bunch of the settings that we have there. Choose different oscillators to work with. I think the volume one happens to work best. I'm Michael with Back to the Future Trading. This has been another episode of NinjaTrader Unplugged.